Hi everyone, and welcome to our new interview series where we shine a spotlight on NAPSA-approved members, those who are making waves in the property sourcing industry. Today, I'm thrilled to be joined by James Lovell-Smith, Director of Lovellets Properties Limited. James, welcome.
Thank you, Tina. Thank you for welcoming me and the opportunity to speak today.
Your company specialises in sourcing HMOs for property investors across Yorkshire and Derbyshire.
That's correct.
Well, I'm sure we're all excited to learn more about your journey and your expertise and why working with a NAPSA-approved agent like yourself is so important. So let's just dive in on that first big question. Why property? What drew you to the industry and what keeps you passionate about it?
I think property, first and foremost, I've always had an interest in for many, many years. When I was teaching, I always had an interest in property and I always saw it as a way to generate wealth. Now, whilst there's many different income avenue streams, the thing that I've always enjoyed about property is that it's a tangible asset. I can see it, I can touch it, I can improve it, and I have control over it. When I compare that to, say, buying shares in a company on the stock market or doing some form of other currency such as crypto, you're buying a stake in it, but chances are if it's in the case of a company, you're not the majority shareholder, you're not sitting at the board, you're not making decisions, and the people who are the decision makers can inadvertently affect your wealth. And whereas in property, you can and you do own the asset and you have control over it. And in the UK, especially UK real estate, it's one of the most stablest, but also, if done correctly, one of the most lucrative avenue streams, certainly in the country, if not in the world. We have a chronic housing shortage in the UK. Quite simply put, we have over 70 million people in this country and we don't have enough housing. We've had 20 years of governments failing to hit housing targets, and roofs are a premium. But having said that, tenants are getting increasingly picky and they won't just live anywhere, and they're going to want somewhere that fulfills their needs and requirements and they feel safe and comfortable and they can call their home. And so there is opportunity there for ourselves as landlords, which we are, but also for other people who we work with, our clients, to have a slice of an avenue of an asset that will generate them income. I never say the word passive because it's not strictly true, but will generate them income and will generate them good capital appreciation and give them control over an asset, which will also add here, in most cases, you can have 100% control, but you only have to use 25% of your own cash you can leverage with a secure lending, which is a mortgage. So that's always been our interest in it. We're landlords, have been for a few years, and then we came into this as an avenue to help other people understand it, and other people to invest in property, but give them a helping hand because of the amount of knowledge and experience and skills and compliance and licensing and understanding refurbishments and understanding tenancy rules and everything else. There are many complex avenues to it that you cannot learn on a 3-day weekend course. So we come into this as our business, as our portfolio building business, in helping others do that by providing a service.
I think, correct me if I'm wrong, but you've been in the property business for over 5 years now. But what inspired you to focus on HMOs specifically, and what do you think makes them such a strong investment strategy, James?
So we have two primary strategies that we use, which is buy-to-lets and houses of multiple occupation, aka HMOs. Residential property has sometimes had a bad press in the last couple of years because of the difficulties that some people are facing and incoming legislation with things like the Renters' Rights Bill. But the reality is, unlike commercial property, which does have its own place, people don't necessarily need a commercial building. They need residential housing because, as I've said previously, there is enough housing to go around in the UK. Buy-to-lets, if done correctly, are a wonderful avenue stream. They are not going to make you a millionaire overnight, but they are a wonderful foundation to build your wealth with capital appreciation and with a regular income every month. Case in point, I had a property that I bought 8 years ago for £150,000. It's now worth 240, and it generates annually £1,400 for me every £14,000 for me every year. So it's a safe avenue stream. Now, HMOs, houses of multiple occupation, multi-lets, however, if people want to think of them, or some people think of them as student lets. They don't have to be. Is a way of supercharging the otherwise buy-to-let property. However, HMOs are a different beast. They're not just buy-to-let plus. They require stringent and compliant safety, fire safety, occupancy rules and regulations. Those amenity standards, those rules and regulations change council to council. But if done accurately and correctly, if purchased and done in the right area with the right target tenant in mind, be it student, be it young professionals, be it another, you can even do social housing, they have the ability to triple or quadruple the amount of rental income return that you would get compared to an otherwise vanilla family 3-bed family house or buy-to-let. And so that's always been an interest of ours, to give our clients an alternative avenue stream. So you can go down the buy-to-let route, which is very safe, very low risk, very hands-off. Then you have the alternative, which is the HMO, which is the higher income stream. Still good capital appreciation, but does require more hands-on. And very much so part of our service is to provide the lettings side at the back end of any sourcing agreement, of any property procurement, so that we can provide that end-to-end service. It's always been an interest, and my primary teacher was a lady called Wendy Whitaker-Large, who I've worked with. I worked with over 18 months. Lovely, lovely lady. I always joke, all of my property teachers, I call my property mothers. They all seem to be 50-something women, and I like the women because they're straight talking, and they put an arm around you when you need it, and they kick you up the backside when you need it as well. So, and you don't get the ego, and you don't get I think in essence, women are more honest. And so, and she was my primary teacher and introduced to me the method of procuring, refurbishing, managing, letting, future-proofing houses of multiple occupation, that enable you to have significantly higher income streams.
So I guess the next question is, why Yorkshire and Derbyshire? What makes those regions so appealing for property investors, in your opinion, James?
So I describe where we are in Yorkshire and Derbyshire. I describe it as the Goldilocks zone. And I have done for, a couple of years now. And I talk to people about this Goldilocks zone. What is that? Well, for people who don't know, Yorkshire and Derbyshire is kind of halfway up the country of England. But when I describe it, a bit like the fairy tale of the Three Bears, whereby it's just right. We have in England, especially in the southern counties of England and London, we have very, very high property prices. Average UK property price, at the time of this recording, is about 292,000. But you're going to pay significantly more than that on the south coast. You're going to pay significantly more than that in East Anglia, Buckinghamshire, Hertfordshire, and London is on another scale completely. Why does that matter? Well, the reality is if you are an investor and you are looking to purchase property in the southern areas of the UK, you are going to have to part with a lot more cash. You're going to have to part with a lot more capital in order to procure and gain those kind of properties. And the rental income that you can then charge in comparison to the amount of money that you have had to part to purchase those properties means that your yields and your return on investments are lower. It's more like in the single digits and less than 5 in some cases. Now, at the other end of this, that's too hot. So the south of England is too hot. Now, the other end of the spectrum is somewhere like the northeast of England, where you can, famously buy a house for £10,000. I mean, I don't know what the street is like and whether you would want to live there yourself, but property prices in the northeast of England are significantly cheaper. However, that is reflected in rents. Now, there is a case in my eyes, the problem with that is that if your rental income is so small that it might only be £100 net profit a month, that it only takes one maintenance issue or one misdemeanor to, in essence, wipe out your yearly earnings. So yes, whilst the property is cheap and it could be less than £50,000, The reality is you can only charge a few £100s a month because that is the going rate for the rent in that area. But if the boiler packs up, or if you have a leak, or if you need to call out a plumber, or if you need to call trades in, your yearly income has vanished. And capital appreciation, is not going to be of the same kind of scale. So I describe the Northeast as too cold, and I don't mean necessarily meteorologically just, okay? I do describe it as that. And so what we have here in the middle is Derbyshire and Yorkshire, and I describe it as just right, in the sense that we have property prices, we have property here that you can purchase that is of what I describe as an acceptable amount of money. In other words, you can buy a 3-bed house here for 125, 130, 140, 150,000 pounds. You can then rent that property out for 700, 800, 900 pounds a month, and it provides you with significant enough yield and a significant enough return on your investment that it makes sense. Okay, and that's why I call this a Goldilocks zone. It's not too hot like the south. It's not too cold like the northeast. It's just right. And that's how I describe it.
That's genius. I would never have thought of that.
Teacher brain, how the teacher in me, how do you simplify it? And I have these little phrases, and that's how I describe it. And I think just the caveat, the second part of that is that where we live here, where Emma and I live here in Sheffield, and if we go down to Derby as well, which is where my wife Emma, she's a Derby girl. I describe this area where we live now as what is in the second wave of investment in the north. Case in point, the first wave of investment probably started about 10 years ago. It was Liverpool, it was Manchester, it was Leeds. Those places, I know you're not a million miles away from Manchester, Tina. You go to those places and you see the amount of development that's taken place in Manchester over the last 10 years. You see the amount of development that's taken place in Liverpool. I think ever since it got European City of Culture, about 10 years ago, these places have boomed in the last 10 years, but that also means that their property prices have increased significantly. It also means that a lot of people have put Manchester and Liverpool and Leeds on a target board and chose to invest in there, which means there is competition. Whereas where we are, we're at the cusp of that. We're at the cusp of that second wave in Sheffield. If you came to Sheffield right now, I could take you to the town centre. I could show you a £500 million development called the Heart of the City that's building up here, right in the middle of our city. I could take you down to Derby and I could show you, £300 million worth of investment. We've got in Sheffield, we've got a £1.2 million commercial infrastructure project that's ongoing at the minute. There's stuff happening up here. And I think for a long time, everyone's thought of the big conurbations and the big cities. And we are on the cusp of it. And now is the time. Now is the time for people to come in to invest at this moment in time.
I think for investors to sit up and wake up and say, well, Manchester, Liverpool and Leeds are not the centre of the universe anymore.
Correct.
That there are other places that you can actually look at and consider. So your regions, your chosen regions, are there any specific trends or challenges that you've noticed or you think investors should be aware of?
The particular challenges, I think, let's put our HMO hat on for a second. Okay, and let's go back to kind of HMO Basics 101. For people who don't know, if you want to have an HMO in an urban area, which I will just say straight off the bat, an HMO is an urban beast. Okay, they do not work in the countryside. They do not work in the Peak District. They work in city areas where you've got infrastructure transport links because the tenants are usually students or young professionals and they need public transport. But any kind of urban environment, normally, if there is abundance of HMOs in there, you'll have an Article 4 directive. So understanding, if you wanted to get into HMOs in our neck of the woods, you need to know exactly where you can do a conversion and where you can't. And I've had recent conversations with prospective clients and we've come off the call with them with a strategy to say, right, you can invest the north side of Sheffield because that is non-Article 4. However, if we are looking to invest in the south side of Sheffield, which is where the two universities are, for example, we have to accept that strategy is going to involve buying an existing HMO and adding value to it, ideally. But that's what we're looking at. That is our target. So that's a challenge. Now, that would apply to any citied area. any urban area. Particular trends, service accommodation. Service accommodation has become more and more apparent in Sheffield. Greater access to the Peak District. There's also a lot more activity, a lot more social events, gigs, concerts, leisure attractions that are making people come to South Yorkshire for tourist destinations, as opposed to traditionally going up to York for historical castles and that kind of thing. But yeah, I would say we're in a good place overall. Like any area of investment, it's a bit like the weather. What's the weather going to be in the UK? Well, the weather's going to be sunny today. Okay, but what's it going to be like in Yorkshire? And what's it going to be like in Cambridgeshire? And what's it going to be like in Cornwall? Well, they are different. So when you put a pin on a city, especially if you're not here, you need to then have ideally someone on the ground who can then say, right, well, that pin you've put in Sheffield, you need to know which areas of Sheffield to invest in and why, and what's there, and what tenant is going to want to live there, and what areas you don't want to invest in, and that requires boots on the ground. And it's one of the reasons why our sector, our industry exists. I think, Tina, a lot of people say, well, why do I need to pay for you? I'll just call a letting agency. I'll just go on Rightmove. It's all on the portals. Well, first of all, it's not all on the portals, because it is who you know as well as what you know. But also, how do you know that that's a good house? How do you know that that's a good investment if you don't know who's going to live in it? Well, I'm just going to rent it out. No, that's not good enough. You can't just rent it out. Who is going to live there? Is it going to be a young professional? Is it going to be a student? If it's going to be a student, guess what? They're going to want to be an S10. They're going to want to be an S11, because that's where the universities are. That's where the clubs are. That's where the bars are. Okay, that's the life and soul of Sheffield. If they're young professionals and they're going out on the M1, which is the motorway that's near us here in Sheffield, and they're commuting, well, they're going to want to be a different side of town. They're not going to be. It's more than just numbers. I think it's the people. It's the people aspect of this sector. It's like everyone cares about return on investment. It's like, yeah, I understand that. It's an investment. It has to work for you. But if you don't consider who is going to live there and who do you want to be a landlord or an investor for, or who do you want as your tenants, it all goes out the window,
It's that hugely in-depth knowledge that you guys bring of your area, not just because you source, but because you've invested yourself. And it's spending that time and the boots on the ground, as you say, and knowing what strategy works in what area, why, and who those tenants are, and what figures you can get from those, and have those ready to hand. That is why, investors should work with you guys on your patch, because you already invest, you have that knowledge. You're the boots on the ground. You can guide them, but not give investment advice. Probably the HMO officer, you probably know the name, as we used to do, what's expected. And, you mentioned very briefly there about serviced accommodation. From your experience, and I know with talking with other sourcing agents and certainly other investors, a lot of areas now, because we see trends come and go, serviced accommodation was the trend for a period of time. Do you think that it's overrun now in some areas with serviced accommodation, and so the returns on that, they're not seeing what they were at one time?
I do. I do think that in many areas, serviced accommodation was the hot ticket, and everyone piled on. Or to change the metaphor here, it was the bus that everyone wanted to get on, and everyone piled on the bus. And now we have a situation whereby in the last 12 months, because you can with a holiday let, for example, you can no longer claim back your mortgage as an expenditure, which as private landlords, Tina, you and I know, we haven't been able to do that for years. But, that changed the ballpark for some people's cash flow. But the biggest thing I find with serviced accommodation is that, we know that there's two types of guests with service accommodation. In essence, it is holidaymakers, Airbnb, or it's commercial. It's your contractors. Some people, they want to do completely different things, in terms of property type and in how you attract them. But the biggest thing I found with service accommodation, I have people who book calls with me regularly. They want to do service accommodation, but they don't live here. Okay. Service accommodation is a very if done correctly, is a very high cash flowing strategy, as we know. It is not going to be affected by the Renters' Rights Bill because they aren't tenants, they're guests. However, you stand and fall on reviews. And if there is a problem at the property, it needs to be solved within 12 to 24 hours. And if you are in London and your property is in Cornwall and you have a job, you cannot do that. So I say to people who come on a call with me, can I facilitate service accommodation? Yes, I can through my contacts. However, you need to understand that service accommodation will only work for you if you have a reputable service accommodation letting agent, sometimes called Rent to SA. Now, I'm fortunate in that the years of me being up here and going to networking property groups, I have a cluster of people around me, from solicitors to tradesmen to architects to letting specialists, who I could then call upon. And in essence, the conversation I've had with clients before, they haven't chosen to accept me on this, is I've said to them, well, if you want to do SA, service accommodation, let's choose the service, and you don't live here, let's choose the service accommodation agent who you most get on with, and the three of us can have a call. And then we ask them, where would you buy? And then we will go and buy that. We will find that for you. That's my job as a portfolio builder. I will find that for you, Mr. and Mrs. Investor. But based on their criteria, because they're going to run it and they know what they want. And that's the way you come across it. And I think far too many people just pile in and they think they can run it and they realise that they can't get enough bookings and they can't facilitate guests' needs or guests' problems, and they don't build big enough contingency for accidents and windows smashing and washing machines breaking down, and it does not work.
I think what they don't realise is they're actually running a hotel.
Yeah, absolutely. Well, no, actually, here's the thing. They're running a hotel, but actually they need to be better value than a hotel.
Yeah, and with no staff on premises to sort it.
Correct.
Yeah.
Correct.
For someone new to investing in the regions that you cover, what advice would you give them to help them get started?
If I have conversations with people who are relatively new to property investing, I will say to them, right, well, we start with you. What are your goals and ambitions for investing in this property? Are you looking to have long-term wealth and crystallize your wealth in an appreciating asset that pays its bills, pays the mortgage, in other words, it pays insurance, and gives you some money in your back pocket? Or are you looking for this to replace your income? Okay. And I think that is the natural starting point. Is this something that you want rumbling on in the background whilst you get on with your professional career? Or is this something that is going to replace what you do? Because that will dictate the amount of cash flow that you need to come into it. And then after that, I will ask, how much experience do you have? If they say they don't have any experience, my personal code of conduct is that I will not work with new investors on HMOs. I ask you to come to me with a background of buy-to-lets, at least even just one or two. At least you've got some kind of skin in the game. I don't go from an investor who has no experience to doing HMOs. They are not buy-to-let plus. They are a completely different beast, and they do require a different level of knowledge and skill set. And yes, I can do a lot of the donkey work for you, but still, it's your property, it's your name on the deeds, it's your name on the license agreement, on the licensing with the council, etc. So I always start with a person. What's your goals? What's your ambitions? Okay. What kind of strategies are you interested in? I do buy-to-let, I do HMOs. I can assist with SA. That's it. I don't do anything else, Tina. I stick to what I know. Once we talk about that, we say, okay, what's your interest for our particular area? Okay. Do you have a background in this area, etc.? I ask a lot of personal questions before we even get to the point of finances. The biggest thing I say to anyone going into property for the first time is understand that this is not get rich quick. Understand that this is a slow appreciation game, whereby if you play the game and you play it correctly and you do everything that you need to do, or you get us to do it for you, because that's part of the service. You get us to run it for you on your behalf. As long as you understand that this is not about you becoming a millionaire overnight and having a Maserati out on the front drive, and that this is actually about slow but steady, in my opinion, very economic, weather tolerant asset class. As long as you understand that, then we can work together. If you come to me on a call and are saying, well, I'm only going to work with you, Mr. Lovell-Smith, if you can find 30% below market value, I'm sorry, I'm not your guy. That's not me. This is a slow appreciation game. Our job is to find property that can add value, but you understand that you will be leaving some capital in this house or this investment. But don't worry, because the mortgage will be paid every month by your tenants, who we will help you manage if you wish. And the capital appreciation in Sheffield, currently 6.7% year on year. Okay. And if you then put 10 years on that, that's not too bad, is it? And I go back to that same point again. I bought a house for 150 8 years ago. It's now worth 240. Okay. It pays me £14,000 a year. Okay. It's not life-changing money, because I know that £14,000, I've got my mortgage to pay, I've got my insurance, etc. But, it's very nice. It's £600-700 in my back pocket every month. And that, for me as an ex-teacher, is the same as me dropping a day at work. And, this all comes back to your personal goals. What is your personal goal here? And that's how I always approach it.
That's great. Thank you. So, James, Lovellets Properties is, of course, a proud NAPSA-approved member. Why do you think it's so important for investors to work with professional and compliant sourcing agents?
There is a lot of... The problem with our sector, Tina, is that there is, there appears to be a lack of any kind of quality control in our sector. And there is a belief by some people that you can just come out of your profession. You can do this on the side on an evening and weekend. You can go on a 3-day weekend course. You can set up a WhatsApp group, join a few Facebook groups and just flog deals. And the reality is that not only is that bad practice, but it is actually illegal. And I think, we've spoken before previously, Tina, we anticipate, or we estimate there is about 20,000 people in the UK who are calling themselves sourcer, deal packager, portfolio builder, property concierge is the new one I've heard.
That's a new one.
I know. I mean, it sounds like that. It sounds like they should be carrying your luggage as well as finding you a house. We think there's about 20,000 individuals who are calling themselves one of those names. And the reality is the vast majority of them, they might have some property knowledge, but they might not have the expertise. They might not have properties of their own. I know it's kind of a stereotype, but some of them are very young men. And bless them, I love their drive and I love their commitment. But I couldn't have done this. I'm now nearly 40. I could not have done this as a 21 or 22-year-old. And I don't know whether that's just they're more intelligent than me, maybe. But I think there comes life experience with having skin in the game and having a bit of knowledge and know-how before you enter this sector. The vast majority of these people get training courses off a 3-day weekend sold by landlords and property investors who have education as their side. But the only way it makes sense to them is to pack 300 people in a room at any one time and charge them a £10,000 or £15,000 fee. And these people, these gurus, these educators, and as a teacher, I absolutely despise, I'm afraid, because I know that teaching is a codified qualification. Tina, with your professional background from policing, you know that your profession was codified, and these people don't have that. And they sell the dream. And they sell this idea of you can go out, sell deals, make 6 figures in 6 months, find 30% below market value properties. And what they don't teach is all of the background stuff. They don't teach the importance of protecting your client's data. They don't teach the importance of checking your investors for anti-money laundering, making sure that we know the location and where the origin of their funds has come from. And it's not taught because it's not sexy and it doesn't put bums on seats. And a lot of people can't be asked to do it because they're doing this on the side on a Saturday or a Friday evening. And they're just not that committed. They just want to flog some deals, get enough to raise enough money for a deposit to buy some houses. That's the reason they're doing it. And so what does that mean? That means you've got a vast, vast number of illegal operators. And so the vast, vast majority of these people don't know what they're doing. Why do you work with a compliant portfolio builder? You work with someone who has taken the time and dedication to learn their craft and to learn what they have to do to protect an investor, to protect an investor's privacy, to protect an investor's funds, and so that they making sure that they buy the right property in the right area at the right price. Because we talk about these sums of money of £125,000, £150,000. That to me is still a lot of money, because I know how hard I would have to work as a teacher to earn those kinds of funds. I don't care if my investor is a millionaire. I care about their money as if it was my own, and I want to look after it. And the reason why you work with a compliant portfolio builder is because they will have transparency, or they should have, or they need to have transparency from day one. This is my fee. This is what I will charge. This is how I work. This is how I onboard you. This is the checks that I will do. This is how I work with agents. This is how I would deliver a property pack, which is, in simple terms, the information on the property which I give to you to then make a decision on. This is how we help you. In our business, we provide an end-to-end service. So if you find a property that you like, that we found, we will then, the phrase I use, hold your hand as much or as little as you like. If you need a solicitor, we've got them. If you need build teams, we've got them. These are people who I've used personally or have come to me under very high recommendations, and I go out and see their work if they're trades, or I've actually met them in person and done the best that I can to make sure that my investors are looked after. And that's why you should work with someone who's compliant and not just take a punt on a deal that someone has slid into a private WhatsApp group and made lots of promises that may well turn out not to be true.
My next question, I think you've already covered, but I'm going to say it because I think it emphasises exactly what you just talked about, James. And I was going to ask, NAPSA emphasises professionalism, compliance and transparency. How do you ensure these values are reflected in your day-to-day operations? And I think you just covered that beautifully in what you said. So I think that's great. You did that without me even asking it.
I mean, in a nutshell, I can shorten it and say, well, professionalism is like any career, treating your CPD correctly, okay? Your continual professional development correctly. If you and I have both come from professions where we had to do that, okay? So being a professional operator is making sure that you stay up to date with your training and stay up to date with the latest legal requirements, but also continually keeping up to date with what's happening in your area, what's happening in your patch. And I'll just say this quickly. This is why you should only work with a portfolio builder who works in a specific patch. Do not work with people who cover the whole of the UK. They cannot do it. I'm sorry, they cannot do it. No one can know the whole of the UK. So you choose your region, Mr. and Mrs. Investor. You choose where you'd like to invest in. You find the specialist in that area, and you come to you, Tina, and they come to NAPSA and they say, Tina, Tony, who do you know in this area? It's CPD and keeping up to date with what's in your area. Compliance is your anti-money laundering, it's your data protection, it's making sure you tick all the boxes, you have all your insurances, your professional indemnity, your public liability. And then transparency. The investor should know from day one after the call exactly what you do and how you do it and what your costs are.
Agree wholeheartedly. And we talk about compliance an awful lot, and compliance is key to help keep you safe. But over and above compliance is those boots on the ground and that knowledge as to what strategy works in what area. And you cannot get that knowledge from being based in London and sourcing deals in Liverpool. Unless you have a background from that area, you were born and bred there, you went to university there, your partner lives there, and you have joint knowledge of two areas, you just can't do it. And NAPSA doesn't allow that kind of sourcing to be approved anyway on the NAPSA website.
But I would also add to that, Tina, even if you used to live in that area, areas change.
They do.
You can tell by my accent, despite I'm in Sheffield, I'm not Yorkshire. Mum and Dad are down in North Cambridgeshire in Norfolk, and I spent a lot of my first teaching years in a place called Kings Lynn on the West Norfolk coast. I don't live there anymore. I could not stand here, I could not sit here and say, oh yeah, I know Kings Lynn inside out. Yeah, I did. but areas change, developments change, and so it's all very well you saying, I used to go to university at Sheffield, but now I live in London, so I can source Sheffield. No, you can't.
Yeah. You describe your service as being a property PA for your clients. Can you explain what that means and how it benefits investors?
So in many cases, the people who come to us and wish to work with us are people who have an interest in property. They have an interest in the returns in property, but they haven't got the time, the knowledge, or the expertise to learn what is needed to be learned to invest sufficiently and correctly and wisely. So the premise of our service is that I work like a personal assistant to our clients. And a personal assistant in the corporate world is someone who will go out and do errands. They will go and do the donkey work, basically. They will go out and they will go and collect the information, collect the data, collect the task that needs to be done. And then they will come into the executor's office and they will hand over the information to their boss, to their directors, to their executor, and say, Mr. and Mrs. Executive, here is the information. The decision is yours. This is the information we have gathered to the best of our ability. Here are the different data points. Here is the information. You make the decision. Because I am not, and I will not have a claim to be, a financial advisor. In fact, one of the things that I do with anyone who comes to me and who isn't sure if they want to invest in property is I will say to them, right, thanks for speaking to me. Here's 3 individuals who are wealth managers, accountants, and financial advisors. Can you now go and talk to them, please, before you come and talk to me? Because I'm not solicited, I'm not permitted to give financial advice. And so a PA does not run the company. A PA provides the information for the director, for the executive to make the decision. And in essence, that's what we provide. We provide the local knowledge, we provide the expertise, we provide the property pack, which says, this is the property, this is where it is, this is the cost, this is the refurbishment, this is the calculation of what we believe that property will be worth at the end. And it's estimated because there is never any guarantees. Remember that phrase that every investment company has at the bottom? All investment carries risk. Property is no different. This is what we believe the property is worth. Here is our evidence up and down the street to why we think that property is going to be worth that at the end. This is the rental income we think we will achieve. Here is the evidence up and down the street and in a half a mile radius that shows we think this is what you could achieve for rental income. The decision is yours, Mr. and Mrs. Investor. And that's how we do it. And so that's why I describe it as a PA service. We provide the information, they provide the decision, because it's their investment.
Now, I believe that you have a VIP investors group, which sounds fantastic. Can you share more about that and what members can expect and how anyone can get involved if they're interested?
Yes, absolutely. I will just say straight off the bat, the VIP group, I'm actually rebranding it. I'm actually changing it. I'm changing it to what I call your portfolio partner. The reason for being this is I had too many people call me thinking that I was a property syndicate and that I was one of these things where there's about 5 or 6 or 7 people coming in together to buy a property. And that is absolutely not what we do. We source property for an individual to buy outright, either as an individual or as a company or in a trust. And so there was some confusion there. And also I think people got confused what the VIP group was. I think some people thought it was like an actual physical club that met up and talked about property. So we've changed it to your portfolio builder. But the premise is the same. The standard is the same. The business model is the same. I called it the VIP group originally because it is how property sourcing should be done, which is on a one-to-one personal tailored service where the individual investor is catered to based on their wants and needs. And that is the service that we provide. It starts with a discovery call. It starts with a chat with me about your aims, your goals. And as I've already alluded to, it starts with you. What is it that you want to achieve out of property and what strategies are you interested in? And from that point forward, then, if you wish to proceed, then you join what is an annual membership to work with me for 1 year. That annual membership at the time of this video recording is £1,000 a year. And that £1,000 is to pay for me to start doing the legwork for you on your behalf, to start finding what your wishes, your requirements are If you are on board with that, then before you make payment, we send you over all your documentation. We ask you to fill in quite a detailed form that, Tina, you helped me put together as well. Is basically the wish list of everything that you would want and require. And it's also the criteria that we go off. It's our search criteria. You pay your fee. At that point, then, you are going to be part of a very small community of investors. My aim is to work with no more than 20 people at any one time. My rationale behind this is I come from the teaching world where I know towards the back end of my teaching career, we were teaching 30 to 35 children in a class. I know as a professional teacher, I can do a better job having 20 children than having 35. And without belittling the investors or without making the investors sound like children, the end of the day is I can serve 20 people better than I can 30. So you'll be part of a very small group of people, hence the VIP. We then go house hunting for you. We find a property that you like. We send you a property pack over with all the details. You look at that property. We then ask for a reservation fee. That reservation fee currently is £300. That reservation fee is not to enable me to take my lovely Emma out for dinner on a Friday night. The reason for doing it is that it's to provide some form of security, and it shows your commitment to the purchase. Okay, it's the same reason Property Meets charge a £25 entry fee, and they have for years. And that's the principle behind it. And from that point forward, we will then hold your hand as much or as little as you like through the conveyancing process. And then at the end of conveyancing is exchange of contracts. Traditionally, that's where the buyer, via their solicitor, the buyer solicitor transfers 10% of the property's value to the seller's solicitor. At that point, we charge our commission, which is 3%. Okay, it's all done through legal channels. There is no transference of any vast sums of money between personal accounts. And that's how we do it. For me, it all starts with a call. Okay, it all starts if people are interested in our services, interested in knowing a bit more about me and how we run our business. It starts with a discovery call, half an hour, sometimes 45 if I'm chatting too much. But it's about you having a feel for why is it you want to invest in property, and if we can serve you. And if I can, we will say that. And if I can't, I will say that also.
You also put a lot of emphasis on community and collaboration, James. So how do these values shape the way that you work with those clients and, of course, other property professionals?
Property investing as an investment avenue is unique in my eyes compared to stocks and shares, compared to ISAs, compared to savings, compared to crypto, because it is, yes, it's a numbers game. The numbers have to stack, but it is first and foremost a people business. You stand and fall as a property investor, not necessarily just on your knowledge or the amount of cash you have in the bank, but your ability and your knowledge of other people who could help you along the way. And so it's, as far as I'm concerned, it has always been about the importance of having a community of people around you. If you work with us as Lovell Property Limited and you wish to join your portfolio partner, part of what is included in your membership fee is what I call access to our little black book. And that little black book has access to all different professional trades, specialists in that field, in the local area in most cases, that I've acquired over the last 3, 4, 5 years. And that's what you get access to. Because you cannot be a plumber, you cannot be an electrician, you cannot be an architect, you cannot be a licensing agent, you cannot be a letting agent, you cannot do all of these things. There are too many moving parts in property. That means you have to delegate. And you need to be able to delegate. Some of those have to be local. Others just need to be very proficient, and so that's so important. It is a people business, and you need people around you, and you need your tribe, you need your village, you need your team around you. And beyond your immediate team, then you want to have a community of fellow like-minded people who will give you the day-to-day drive to keep going, because property isn't always sexy, and property isn't always about the big money. There are lots of decisions that you have to make. There's good days and bad days. Tina, you know that as well as I do. And some days you need people in your corner and you need people who understand you, who understand what you're going through, who understand the same, you all have the same pain points. You all have the same worries. You all have the same aspirations and fears. You all might be doing it all different strategies. Someone might be doing buy-to-lets, HMOs, SA, social housing, but you've all got something in common. And having that ability to vent and that ability to share ideas. Well, this didn't work out. What did you do? How did that go for you? Or my a builder, he's let me down this time. Do you know anyone? That kind of stuff is priceless. I mean, I feel like I've badgered on about WhatsApp and how much I dislike it for finding properties, which I completely disagree with. But it's fabulous to have community groups, and I've got at least 4 different property community WhatsApp groups who I'm a part of, and they're up here in the local area. We don't allow people to sell on the groups, and it's always about, do you know someone? Do you know someone? Do you know someone? And everyone just helps each other because it's lovely, and I don't know if that exists in the other avenue streams of stocks and shares and crypto, if people are so generous or helpful to each other. I don't know whether those sectors are more like, I've got my cards, I'm keeping them close to my chest. Whereas I feel in property, it's slightly more open if you're in the right circles. So one of my aspirations for your portfolio partner is that when we've built up a sufficient number of clients and we have current clients, and we might even have kind of alumni. Going back to my academic days, Tina, we have like alumni people who used to work with us and now they don't in the current year. I would love to have the facility to have physical meets, and just a couple of times a year have reunions and get people together in a room and get people like yourself coming in and doing guest talks. Building community, in property investing. Landlords get a bad rap of being old white men who have a a top of the range Range Rover Sport and a tin of Dulux, a matte emulsion in the back. It's just not true. And we are human beings, and we're not all nasty people who keep tenants in properties that belong in a Dickensian novel. We do actually look after our tenants, but none of it. We cannot do everything ourselves. It's a people business. You need your team around you, and beyond that, you need your community.
So next is a message from you for investors who might be listening to this interview and have stalked you for a period of time on social media, as
Yes.
they do.
They
And
do.
they might be, as they do, and they might be sitting on the fence about working with a sourcing agent. They may never have worked with one before, or they may have had, as a lot of investors have had, a bad experience with a sourcing agent. What would you say to them to reassure them about the value and expertise that you bring to the table, James?
I would say, first and foremost, if you have half an hour to spare, jump on a call with me. It's completely free. If I can help you, I will. There is no obligation of a sales on the other side. I'll tell you about my services, but I'm not going to push them onto you, and see if it is something that we can help you with. I've clearly stated that we live here. Emma and I live in Sheffield. We do South Yorkshire and Derbyshire, and that's it, because that's our patch. That's where we live. This is our home turf. We do not go beyond those realms. If that area is not of interest to you, that's absolutely fine. But whoever you choose to work with, or whatever you choose to do, if you are not local, you get someone who's local. If you are not local to where you invest, find someone who's local, who does know the area and is the boots on the ground. And then beyond that, find someone who is compliant, who is professional, and who is transparent. Avoid, like the plague, these groups that promise lots, but you never hear the end story. And you don't hear the other side. Work with someone who's going to work for you and with you, not just flog a property out to you, and because the numbers sound like they make sense and they stack, that it must be all right. So, and that's what I'd always say. Talk to people, right? I'm afraid, property is a people game. If you are not, if you're not a people person, okay, fine. But it's a people business, and start that by approaching us, having a chat, having a conversation, see where it leads. If I can't help you, I might be able to help someone. I'll give you the names of someone else who can, or indeed, as we say, Tina, they should approach you and approach your association and you can guide them and signpost them in the right direction of who to work with. And that's what I'd say to them. Just come and have a chat. There's no obligation here. Come and have a chat. If I can help you, I will. If I can't, I'll tell you that. And if I can then point you in the right direction, I will.
James, it's been an absolute pleasure speaking with you today. Thank you for sharing your insights and all of the expertise that you've shared with us. For anyone interested in learning more about James and Lovellets Properties Limited, we'll include links to his website and contact details with this interview. And remember, if you're looking to invest in property, always work with a professional and compliant sourcing agent. Thank you for watching, and we'll see you in the next interview.